And welcome to The Truth About, your go-to source for understanding the complex forces shaping our world. Today, we're diving deep into an issue that's directly impacting every single one of us: why your wallet feels like it's shrinking. We're talking about inflation and interest rates, terms you hear constantly, but do you truly understand their power over your financial well-being? We'll demystify these economic giants, explain how they erode your purchasing power, and explore what this means for your daily life. From the price of your groceries to your mortgage payments, these forces are at play, making it crucial to grasp their mechanics. Get ready to understand why your money isn't stretching as far as it used to, and what you can do about it.
Let's start with inflation, often called the invisible tax. In simple terms, inflation is the general increase in prices for goods and services over a period of time, leading to a fall in the purchasing value of money. Imagine you could buy a certain basket of goods for $100 last year. With 5% inflation, that same basket would now cost you $105. Your dollar simply doesn't go as far. This means your savings, sitting in a bank account, slowly lose their real value. It's a silent erosion of wealth that impacts everyone, particularly those on fixed incomes or with significant cash savings. Understanding this fundamental concept is the first step to protecting your financial future.
Let's start with inflation, often called the invisible tax. In simple terms, inflation is the general increase in prices for goods and services over a period of time, leading to a fall in the purchasing value of money. Imagine you could buy a certain basket of goods for $100 last year. With 5% inflation, that same basket would now cost you $105. Your dollar simply doesn't go as far. This means your savings, sitting in a bank account, slowly lose their real value. It's a silent erosion of wealth that impacts everyone, particularly those on fixed incomes or with significant cash savings. Understanding this fundamental concept is the first step to protecting your financial future.
Now, let's turn to interest rates, the primary tools central banks use to manage inflation. Central banks like the Federal Reserve in the US or the European Central Bank set benchmark interest rates. These rates influence everything from what banks charge each other for overnight loans to the rates you pay on your mortgage, car loan, or credit card. When interest rates are low, borrowing is cheaper, encouraging spending and investment. When rates are high, borrowing becomes more expensive, which discourages spending and can cool down an overheating economy. It's a delicate balance, aiming to keep the economy stable without tipping it into recession.
How exactly do higher interest rates combat inflation? When central banks raise rates, they're essentially making it more expensive to borrow money. This directly affects you and businesses. Businesses borrow less, investing less in expansion and hiring, leading to reduced demand for goods and services. For consumers, higher rates mean increased mortgage or loan payments and more expensive new loans, discouraging big purchases like homes or cars. Less borrowing and less spending ultimately lead to a reduced demand in the economy, which in turn takes pressure off prices, helping to cool inflation. It's a calculated move to rebalance supply and demand, bringing prices back to a more stable level.
The combined effect of inflation and rising interest rates isn't just an abstract economic theory. It's a very real impact on your daily life. You're likely already feeling it at the checkout counter, with higher grocery bills making your weekly shop more expensive. For homeowners or those looking to buy, increased mortgage/loan payments due to rising interest rates mean a bigger chunk of your income goes towards housing. And if you're saving, the stagnant savings value is disheartening as inflation eats away at your money's purchasing power, meaning your money doesn't buy as much as it used to. This dual pressure leaves many feeling a significant reduced purchasing power. Inflation isn't just a national issue, it's a global challenge. Interconnected economies mean that factors like global supply chain disruptions from geopolitical events or natural disasters in one part of the world can impact prices everywhere. Geopolitical tensions, such as conflicts or trade disputes, also create volatility and uncertainty in markets, further fueling inflation. Expert forecasts suggest continued economic volatility in the short to medium term as economies adjust. While some signs of easing inflation are emerging in certain sectors, the path ahead remains complex, influenced by a multitude of international and domestic factors. Staying informed about these global trends is crucial for understanding your financial landscape.
Policy, through taxation and spending, can influence demand. Simultaneously, central bank monetary policy, primarily through interest rates, aims to stabilize prices. For individuals, proactive strategies are key. Personal budgeting strategies become more critical than ever, tracking expenses and cutting non-essential spending. Considering investment diversification can help protect your assets from inflation's bite by moving beyond traditional savings accounts into assets that tend to perform better during inflationary periods, like real estate or inflation-protected securities. Empowerment comes from informed action. We've covered a lot today, from the fundamental definition of inflation to the powerful lever of interest rates. The key takeaway is clear. Inflation reduces wealth, and interest rates impact borrowing and spending for everyone. But understanding these mechanisms is the first step towards empowerment. Don't be a passive observer. Stay informed and adapt to changing economic realities. By implementing proactive financial planning, like careful budgeting, smart saving, and diversified investing, you can better navigate these challenging economic waters. Your financial future is in your hands, and with knowledge, you have the power to protect your wallet from shrinking further. Thank you for joining The Truth About.